Hello and welcome. Justin Adams coming to you here, Swipe Trades Master and a top trader and educator with Imarketslive. I decided to put this video together to basically help the newest person coming into the business, or if you've been trading a long time, how to properly find entry and use a harmonic scanner to your leverage. That's why we have the tools, right? The scanner is actually one of the most effective tools that we have as far as, from a market structure standpoint, and as far as ratio trading standpoint, which is what a lot of my analysis is based off of, ratio trading. So really quick, I'm going to show you guys how to use the scanner effectively and properly. Just give me a minute to share my screen real quick. So I actually found this USD CHF page. Let me minimize some stuff here for you. All right, so this USD CHF bat pattern on H4. Now, what I usually do when I'm using the scanner is I'll look at the scanner, I'll scan a trade, and let's pretend this mess didn't happen yet, right? Let's just say we just saw this trade happen, and I chose this so I can show you guys exactly why this rose from point D and hit the target profits of take profit 1, 2, and 3. So what I do is I use a trading platform called TradingView. So this is right here, tradingview.com. You can make an account. My username is JAdamsFitness. You can go and follow me on there if you'd like. I'm going to be posting a lot of chart analysis within the next couple months and all this year to really help you guys take your trading game to the next level. So with that being said, we have our USD CHF, H4 pattern. What I would usually do is I'd start on a higher time frame. So I'm going to the daily or above time frame, and I'm looking at exactly where the market is from a structure standpoint. So if you see here, you can see there's a huge rally from here to here, and I'll draw that out just like this. You can see it wick down here on a daily, and you had this huge rally down in here with a retracement down into here. When I'm looking at this, obviously you can see that this is a new upwards trending market. Why? Because it broke structure to the left. If we look to the left, market leaves clues. You have structure right here, resistance. You have some previous ones right there, and it broke all this right here. So seeing that, I know the market's now in an uptrending market. This being, and you guys got to write this down, take some notes if you'd like. When you have a bullish pattern like this in a bullish market, it is the most effective way to trade harmonics, is trading with the trend. So back to our trading view, USD CHF. You see this right here in the daily. You find these structure points right here. We'll delete these right here. So next, after identifying the trend, I'll go to my H4 chart to where the pattern was formed, and I'd actually draw in the pattern. And what else I'm going to do is I'm going to look at the structure here. You can see there's a break of structure here, that same daily structure here. You had some, rally down into here. You had another consolidation wave up into here, and then you had this huge mess down, clears a bunch of orders, and it finally shoots back up. The scanner caught this point right here, which is the point D. I'm going to show you how. And look, rose about, this trade went, let me just give me real quick, approximately about 280 pips. So seeing this, analyzing this, if the scanner showed, what I'm going to do is I'm going to actually draw the pattern in. So we actually have the pattern here, which was point X. You have X to A. You had a retracement down into here to the 88.6 here. And then down to the 88.6 here, which gives you a nice bat ratio right there. Retracement at 38.2 from A to B. B to C was an 88.6. And then X, to D was 88.6 as well, around that same range. So seeing this, it's actually fairly easy to find an entry. One, it being a bullish pattern in a bullish market going with the trend. You see this here. From harmonics aside, what you can actually see is when you're looking at zones, and I had a zone right here, and I drew a zone here specifically, and I do zones a little bit differently. I do it kind of with a bank institutional way. You see this wick right here and this candle down here. I'm actually going to delete this harmonic so you can see it. This wick here is obviously where there was indecision in the market. But also what I'm doing before that is this huge rally that happened off of that level. The candle before I'm looking at as well as part of supply, and you can see to the left there's some small wicks down there too right here. So I'd actually I drew this from the small wicks down to this wick down here, and you just drag it across. I'm going to delete this one right here that I was just showing you guys before. Delete this here and make sure it's pinpoint accuracy. Go down a little bit. Okay, so that should be good enough right here. So we can actually see that not only did this come down and touch exactly at the top of the zone right here, if we were to take our fibs from this rally here, if you combine this right here, our Fibonacci actually expands right into that 88.6. So seeing this break of structure, you see this break of structure, you guys understand right here, you see a break here and it rallies up here. All this stuff was broken to the left. This rally is the one that kind of did it here. So when you have this rally here, actually what you had here was you had an ABCD wave up to get the X to A of the harmonic. You had a nice rally, break of structure, a retracement into some, a certain zone, and a rally up, which gives you one rally up from the X to A. So let me just delete this real quick. So seeing this, what you're looking for is a zone for the trade to continue its upward movement. Why? Because on the daily, we can already know that it's an uptrending market. We're looking for buys. And two, you see this H4 break of structure, all this stuff to the left. I mean, you can see this line right here. All this was acting as resistance, was now broken. So we take this wave that broke that whole resistance, and we find the retracement level mixed with the zone and previous support to an 88.6, which is what this was, and the harmonic. It was confluence for a buy all day long. So here you can actually see that this level actually acted as support. So you see this consolidation range. I'm going to show you guys right here. This whole time this trade was consolidating here, right? Actually, I'm going to do this a different color. Right here. Okay, so this whole time, this is consolidating range right here, this consolidation. So this whole level right here, this black line right here that I just drew, was acting as a level of support. So what happened is this rally, this ABCD up, which was an X to A and a harmonic, broke structure to the left, and then it rallied down into a previous support level, which was also an 88.6 and also to the top of the zone. So how would you find entry seeing this trade if you were just looking at the scanner entry? Well, let's draw our harmonic again. Here, down to 38.2, up to here, 88.6, and then down to this 88.6 right here. A nice bat pattern, confluence, bullish bat pattern in a bullish market time frame, because we went to the daily time frame and looked at it was a bullish market. So here, you can actually see the scanner called an entry exactly on the 88.6, right? So what you could do is seeing this is before, when price hit this level right here, I'd actually be looking for retest to this area zone on a lower time frame. And I didn't get to look at the lower time frames yet, but we're just going to look here like a 15-minute. We're going to go down to that level. And in this case, it was just a wick down. It was probably some news or something. But with the higher time frame, we can obviously see in the H4 market that it's an uptrending market. We can see here, right? Consolidated range here. It found structure support right here. It tested here. It broke. Retracement down slowly but surely down into an 88.6. Our ratios are there, a perfect bat from X to A, retracement from the B into a 38.2 zone, and then it retraced up from an A to B into an 88.6 area, and then a retracement down into an 88.6 of the XA leg, getting a bullish bat pattern in a bullish market. Buys on the 88.6, and obviously you can see your confluence with the zone and with the structured support is for a buy for 280 pips. So again, how you're going to find perfect entry is, first I'm going to look at the daily time frame. I'm going to write this down. Daily time frame, and look at the trend, right? Look at the trend. Two, then we're going to go and then we're going to draw the harmonic in that's on the scanner, right? Once we do that, we're going to find structure support or resistance. And then after that, we're going to see if there's a zone for more confluence and if the ratios are correct. So in this case, the ratio was there, 88.6 from the X to A. Everything else was there. You had the zone here in the top of the zone. You had the structured support and confluence with the buy for 280 pips. We can do this for another one too, and I'll just choose one here. Even on the lower time frames, 15-minute, we'll see here. We can see a Euro JPY Gartley. Let's see this one. Started making its way move down. Okay, so we can see here, if I was on the 15-minute Euro JPY, let me just go here for you guys. Do this live. I already have some stuff here. I was already analyzing on H4. Let's go to 15-minute. Okay, so we can see that even on the 15-minute, structure still leaves clues. You see all this area right here is acting as kind of a support area, right? So we had a rally down, a rally back up, a rally down, and a retracement into here. So you can also see that this was also broken by this rally here. Upwards into here. Consolidation level is actually up to here. I think it's the ratio right here. This right here broke all this stuff to the left. If I were to move this, it broke this. And it kind of broke this a little bit right here. It's just been fighting this area right here. So seeing this on a 15-minute time frame, yes, you can sell it, but in my personal opinion, the market is uptrending. So with this, you have to be careful on a counter trend trade. It's actually be a nice trade because when you draw in the harmonic here, I can just eye this out. Here, retracement up to here. This is actually like a 60, around a 61.8, down into a 78.6, up into a 78.6 here, around there. On the 15-minute time frame, yes, it started going down and it went back up. You could have caught a nice little small move here, but the bigger play was probably, we caught a nice little small retracement because we can see when we draw from the C to the D, it retraced right into a 38.2 and rejection off 38.2 for maybe a trend continuation trade. But this did catch a small, nice little move here. Pips was around here, down here about 25 or so pips. Not too bad of a trade. But seeing this, what I would look for is I didn't really see, you see this consolidation here. Yes, for a nice sell, the ratios were there. And it was kind of a previous structured resistance trade here. But I didn't really see a zone. It didn't tap this H4 zone, and it's in an uptrending market there. Let me try to find another one. I usually like the higher time frames as well. Let's see this one. GPB odd was a nice trade here. So GPB odd on the H1. Let's check this one out. Remove all drawing tools. Okay, so let's look currently what trend is doing. And obviously you can see that the trend is going down. Why? Because you see consistently higher highs and higher lows, right? You can just see that by looking at this. Higher highs, higher lows, all right here. I would draw them out, I'm kind of like doing a little ellipse thing, but you can see it's obviously downtrending market. Why? Because this rally that broke structure here, my horizontal ray, this last previous support, this rally that broke it here, the market is not back up past this. Once it's past this, then it'll be a trend change market. But you can see it's finding a resistance based on this level here on a daily time frame. Look at this consolidation. So when looking at this trade on the daily, you see this consolidation on this level. If I were to just draw fibs from this high here to this low down here, you can see it's exactly at, not exactly, but it's in a 61.8 and 50 zone. You can see this 61.8 here, and between 61.8 and structure can kind of be your entry point. So if I were to keep this drawing here and we go to the H1, so it's a downtrending market, one. I'm going to do that right here. So one, what is the trend? Daily time frame, look at trend. Obviously, trend is down. So seeing this, it's what? A bearish pattern in a bearish market, right? So with that bearish pattern in a bearish market, I'll keep this to the side. Seeing this, let's draw in the pattern. You see where it is here, boom, boom, XA, XB. All right, so we have this second. Just find this real quick, give me a second. So we have the gap here. Boom, 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 boom. Okay. So here, up into around a 38.2%, down into a 78.6, and up into a one, around a 161.8, around there. See if I do that right. It can actually fall down a little bit more. And there, and here. It's there. There we go, that's where it is. So when you're looking for like a crab pattern like this, it should be a crab, let me check. Yep, crab pattern, you see it can hit a ratio of around a 161.8 area around here. So seeing this, yes, on H1, you can see that structure was broken on the H1 here, but overall, that can happen, especially in, kind of inconsistent markets. I know this whole time it was around the holiday time and markets were inconsistent and didn't know which way to go. But looking at the daily time frame, obviously what harmonics are meant to do is they're meant to correct the market. So seeing a bearish market, a downtrending market, and seeing a bearish pattern, obviously that's confluence for us right there. You see the structured, kind of resistance right here, kind of broke, formed a pattern and fell down. If I were to look here, you have some resistance right here. If you look to the left, leaves clues. So this part right here, you can actually see that, kind of like was right there. Just look on a higher time frame real quick. In this case, I look at higher time frames, see if there's anything that I need to look forward to the left. And obviously we can see a nice zone to the left right here. Doesn't quite hit it. Okay, so right here. There's an area of resistance right here. And how I'm getting this point, just so you guys can learn, is I find points in the market that act as support and resistance. So here, what did it act as? Acted as resistance, came down, retest, boom. It broke, and then what? It acted as support right here. Rose up a little bit, broke it, and so forth. So that's a nice level right there for me. So we can see having this line here drawn, if we go back to our H1, we can see that right around in that price zone with the crab pattern formed is confluence for a sell. Also on the daily, I'm going to go back and draw. We had the 61.8 zone around here, consolidation. Overall was a nice trade, may have been a high risk trade. Let me see. So seeing this, what I would have done was would have put stops right above that high, which this price was around 1.2257, would have been about 10, 20 pips above the high, which is what was kind of recommended here. Same thing. And then obviously this market fell from point D 350 pips. So again, what did we see was we drew, so time frame trend was down. We drew the harmonic, right? Found structured and support resistance, which is right up here in this zone right here. There's also some down in here. This line right here. It was consolidating on this level for a long time on a daily. There wasn't really a zone that it really like tapped and touched, but the ratios were there. Harmonic pattern down, retracement into a 50%, down into a 78.6%, and up into a 161.8% from an ABCD standpoint. It was a nice confluence for a sell for that. So 350 pip move. So with that, guys, I hope this video can help you really learn how to utilize the scanner more and really find those points of entry in the right trades. Because it's very important to understanding structure. It's important to understand the ratios of the patterns, because we need to make sure those ratios are hit, first of all, and it's on a crucial resistance zone level, and that, it's going with the trend, most of all. You can take counter trend trades. They're very risky. Obviously we saw in the Euro JPY, you can, take the counter trend, but obviously it went 25 pips, it's quick in and out trade and 15 minutes. And then, I went from there. So with that, guys, I love each and every single one of you. We're going to do some big things this year in 2017. We're going to bring you more trainings, more knowledge, more value. And I hope all of you watching this, in the future or before, January 14th, the biggest event so far with Imarketslive, the regional in Dallas. If you haven't gotten your ticket yet, please get your tickets now. I have a voucher right now for 20% off your tickets. So please contact me directly, inbox me. But with that being said, hope this video gives you some value, some help, and I'll talk to you guys later. Much love.